Hello. Well, it's been a volatile week for prices ahead of the EU referendum. Now, the outcome is known. Oil prices have fallen sharply as the dollar strengthens, and gas and electricity prices have risen as the pound has plummeted. So let's take a look at the week's movements in some more detail. Front-month Brent closed on Monday $1.74 per barrel higher as the US dollar weakened. Reports that Saudi Arabia's exports fell in April to the lowest level in 6 months, despite its high production, also contributed to the rise in prices. Oil fell around $0.50 on Tuesday, and this was on the back of the news that the Nigerian government and militants have agreed a ceasefire. And despite a volatile day's trading on Wednesday, prices closed the session flat. Brent softened initially on Thursday. However, a late rebound in prices led to the front-month contract closing $0.5 per barrel higher and closed the session at $50.41 per barrel. This morning, following news that the UK has voted to leave the European Union, oil prices have fallen. They're currently trading at $48.6 per barrel as the US dollar has strengthened. A strong dollar tends to suppress oil prices. As oil is priced in dollars, it becomes more expensive for holders of foreign currency. The system opened on Monday heavily oversupplied, although length was lost during the day as imports into medium-range storage increased and Norwegian imports fell. In spite of the system's length, all contracts posted gains on Monday, directed by higher oil prices. In contrast, on Tuesday, the system was undersupplied, although prices fell nonetheless. All near-term and longer-dated contracts posted gains on Wednesday, following an announcement that Centrica's rough storage facility would cease injection and withdrawal operations until the 3rd of August, due to an issue with one of the site's wells. Contracts then fell on Thursday as the pound strengthened against the euro, as voters headed to the polls. Last night, near-term contracts closed lower than last Friday, whilst longer-dated contracts were mixed. Winter 17 rose 0.4 pence per therm, while summer 18 lost 0.3 pence per therm. As the UK decides to leave the EU, prices so far have risen as the pound falls to a 31-year low. Prompt contracts fell on Monday thanks to an increase in nuclear availability. However, all near-term and longer-dated contracts posted gains in line with the wider fuel complex, with oil, gas, coal and carbon all rising day on day. Prices eased on Tuesday, taking direction once again from their gas counterparts. All contracts posted significant gains on Wednesday, as demand forecasts were revised upwards, and an unplanned outage at Fiddler's Ferry coal plant was extended. Some of Wednesday's gains were reversed on Thursday, thanks to an appreciation of the pound. However, all curve contracts closed last night higher than last Friday. You can download the full version of this report from the Energy Price Information tab on our website. Thanks for watching, and we will see you next week.